Hey guys, Gil Stokes here. Welcome back to another Weekend Trading Edge video. Apologies if my voice is a little out of it. Been battling the flu all weekend, but want to hop in and give you guys a video. Got some cool opportunities to look at. I don't know if it's just me. I feel like I never got sick too much in my whole life. And as soon as I have kids, right, I get sick all the time. Must be some type of correlation there. But yeah, dealing with it, fight through it, we'll work through because we're traders, we're tough, that's what we'll do. So let's start here on the pound yen. Pound yen is an opportunity that we finished up looking at in the live room this past weekend. You can see some of the notes are still on the chart, but we're looking for a continuation trade higher here on the pound yen. We're looking at the daily chart right here. But if you go to a weekly or scroll really far back, you'll see that the different multicolored lines, specifically kind of the green ones, right? That's the next major level of structure resistance that I expect price action to come to, right around the 194 even handle. There's a minor level up at 192.25s as well, so 192 quarter. But the major one is going to be in that green mark. And again, you can scroll back here on a daily back to 2015 or go on the weekly for a better view. But following that very important IPDE process that we always preach here at Tier 1 Trading, if you guys are new to the video, that is a 4-step process that I think all traders should use. Now, yeah, you can do what you want with it, customize it, of course, but consistent action, right, plus consistent analysis, excuse me, you can see I'm out of it, forgetting my own catchphrase here. Consistent analysis plus consistent execution equal consistent results. So consistency in how we analyze the market is important. And, you know, one of the things that gets a lot of traders in trouble is bouncing around, doing different things, looking for different things each time and not really having a path to analyze the market. So that IPDE process, we want to identify what price is doing. Based off what we identify, we want to predict what we think is going to happen next, where we think price is likely to go. Then we decide how we can attack, and then finally we execute the trade. So we identify that price is cleared a previous level of structure right here at 190, this red level. We can identify that the next level of structure higher, again, 194 or 192 quarter, we can predict that because we have a higher high, higher close, price is likely to continue to this level. So now it's easy for us to decide what type of trader we want to be. I want to be a bullish trend continuation trader. And then based on your trading style, for me personally, it's a pullback trade. I want to wait for a pullback, so price action to give us a little bit of relief like this, boop, for my next opportunity to jump on the wave higher. So when we do this, we'll go down to multiple time frames as well. I'm a big fan of multiple time frame analysis. You can see if we go down here on the 4-hour, the level or the zone, I should say, that I'd be looking for this retracement, this pullback to come into would be right here, the little structure rejection right up here, previous inside structure right there. If we go down to the hourly, we can get a little clearer view of that picture as well. Now, if we want to isolate this a little bit more, the two levels I would pay attention to, one is going to be right in here, and another one is going to be right down here, right? Elephant candle people, right? You know about this. I'll bring my little thing up. This is a little insider thing we do in the live room, but looking for elephant candles, identifying the zone between the elephant candles. If you guys are familiar with like supply and demand, stuff like that, it makes sense. I would bet, and I hope I'm not wrong here, I'll edit it out if I am, right? Because I cheat like that. I would bet that we're going to have some volume spikes probably at this level right here or this level up here, and that's going to be just more confirmation. Yep, you can see. So we bring our volume tool on. We measure the volume, which is synonymous with interest, right? Interest in the market. You can see we have a big volume spike right here, really this whole zone. We get a little bit of a void underneath this first box that I drew, and then we pick up right at this next level right here before massively picking up down here at the level of consolidation. So if there are two places we want to pinpoint, I would say one is the zone that we're trading in right now. Two is down here, maybe by this 190 even handle. Again, a retest of that previous level of structure that we broke. And it looks like if I were to bring in, I'm going to do one more thing to build confirmation. I'm all over the place, so if you're new, I apologize. Don't worry about this. If you're new, just focus on the zones. Don't worry about all the other little stuff. I bet if I bring a Fibonacci extension and invert it, swing high to swing low backwards, we're going to get a 1618 there. Yep, 1618 right down in that zone. So a little bit more confirmation. So if you're looking for a buying opportunity here on pound yen for a big continuation trade, right? Look no further than this area right here if you can get a reason for entry, or if we end up breaking past this level, and or look for a secondary entry right down here for that move up to 192 quarter or 194 even. Next, we're heading over to the pound dollar. Here on the pound dollar, we're going to look for a potential advanced pattern formation, another one that we've been tracking all week. The zone has already been drawn out because, again, I didn't delete any of my notes this week, pop it on the chart for the first time since Friday. But our advanced pattern formations, for you guys who are new, there are a series of extensions and retracements that come to very specific Fibonacci levels in a very specific order. And when they do, they offer some really high probability trading opportunities. Usually they come in areas of consolidation. So when the markets are kind of going like this back and forth, right, you'll see advanced pattern formations all over the place. And it's a cool little strategy to have or add to what you're currently doing. One of the reasons that I love advanced pattern formations is because, well, the market, one, they're simple. And so if you're a newer trader, you have problems, following rules, it's black or white. You still need to work on your skill of identifying the certain legs, but it's pretty black or white. Either it hits a mark or it doesn't hit a mark. It takes all the thinking out of it. And many new traders destroy themselves because they overthink or think they know more than the market and all that fun stuff. So it makes it nice and simple. But it also gives you a way to trade periods of consolidation. And the honest truth is that specifically in the Forex market, we're going to be in consolidation about 70% of the time. So most of the time, the market is not trending. So any trend trader, you can leave me a comment below if you've experienced this. If you're a trend trader, have you ever experienced the time where you get a trend trading opportunity and then it seems like there's days and weeks and months before the next one occurs, right? I've dealt with that. This is a way to have kind of a supplemental strategy that you can add to it. So we're looking at a potential advanced pattern formation here. We're going to start this with our move right here. This is going to be called our, there we go, try that again, X leg. This is going to be our A leg down here. That's going to start our pattern. I'm going to take a Fibonacci retracement from the high of my X to the low of my A and look for where my B retracement comes. My B retracement is right here. The fact that my B retracement hits a 618 Fibonacci retracement level means that I'm going to alert for what's called a Gartley pattern. And then I'm going to kind of shortcut the next part of it just for time's sake. I'm going to bring a 127 extension out. And I know that my Gartley completion is going to be right at that 127. So an X to A, an A to B, a B to C right here. This has to be beyond before A. And then a D completion right up here in this zone. And again, the pattern technically completes at the 127, but the zone of the pattern, the validation zone, goes all the way to the X leg. So as long as this X leg isn't, as long as price action doesn't push above that X leg, it's valid anywhere in here. So me personally, I take it aggressively. I put a limit order right here and look to sell as soon as it hits that level. But if you're looking for a more conservative approach, maybe a more hands-on approach, you can always do something like, if price action enters this zone, then you look for XYZ to get in the trade. But a nice potential bearish Gartley pattern here on the cable for you. Next, we're going to visit the DAX here. We are at all-time highs with the DAX. We did a little prediction of where this extension may end, right? This is where your technical tools really come in handy. When I'm a structure-based trader, right? So typically, whenever I'm making predictions in the market, I can make predictions on where price is likely to go, where an extension is likely to terminate by finding the next level of structure. But when you are creating all-time highs, there is no level of structure up here. So this is where we need to use our other technical tools. What we did was a kind of a basic CTS type thing, right? We took a very basic harmonic move, a one-to-one measured move. So we measured the length of this leg. This would be your A to B. Your little pullback in here would be your B to C. If I can get it going, sorry. Here we go. This would be your B to C. I'm all over the place. Rough weekend, I told you guys. I'm lucky I'm doing this video, but let's copy and paste this. We'll drag it on, and this would give us a one-to-one measured move or an AB equals CD pattern. And coincidentally, right, because all this stuff is random black magic, right, the market terminates right at that D completion. We could also bring confirmation to that with a Fibonacci extension. We'll take our Fibonacci extension tool from our swing low to our swing high right here, our A to our B, and back down. And you can see a 1618 Fibonacci extension at that level. So we have a 1618 Fibonacci extension. We have an AB equals CD pattern right at that level. This was a good prediction we made for where the market may terminate. Now, this is very important. we're making this prediction, not necessarily saying that we should sell right here. I'm never a fan of selling, when, especially in an index, when it's at an all-time high with no structure. I think that's a dangerous sign. I'd rather be bullish, and wait for pullbacks. But it is something that you could use. The reason I want to figure out this termination point is because I want to start predicting the next move, right? I know I want to get long this. Right, so I want to know when this extension ends, because I don't want to buy it up in the middle of the extension, right? We don't want to be those traders or investors who are late to the party, right? My first mentor told me this all the time. He said, Akil, by the time you hear about it on the news, it's too late, so just wait. So meaning that when the news is saying, hey, buy the DAX, buy the DAX, buy the DAX, everyone who's already seriously interested in buying it already did. If you buy it, you are late. You simply become liquidity for the previous buyers who are looking to kind of get out the market, take profits, and sellers looking to push it back down. So I use this as a way to tell myself, okay, where is the exhaustion point? Because I know after the exhaustion point will come a little bit of relief, right? After you throw a ball into the air, it can't go into the air forever. It has to take a breather. It has to come back down to earth before it can gather more steam and extend higher. And this is the move that I'm looking for. So there's two ways we can look at this pullback here, right? One, similar to what we did with the pound yen, right? I have my zone right here. This is my kill zone, or as the tier 1 traders call it, the kill zone. Ha 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 ha. Yeah, you get it. My name, kill, blah, 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 blah. So this would be the zone in which we're looking for price action to come to for the next buying opportunity. And we can draw on fibs, and we'll break down this level in more detail during the week. Or if you're super aggressive, right? We have an interesting pattern forming right here. This may end up being an ascending triangle, which is a really good bullish breakout pattern. It is my favorite pattern to trade, ascending and descending triangles, because they're super easy and there's super not a lot of risk on them as well. This may end up being one of those, or it may end up being a high and tight flag. And both of those will offer low risk buying opportunities as well. Because if you're trading this as a high and tight flag, let me just find my deal here. Let's say even if you're loading up right in the middle, you know that in a high and tight flag, you're wrong if price breaks the lower trend line, right? So you can see right now what your stop loss has to be, right? You're taking on very limited risk based on you expecting a breakout. With a ascending triangle, it'll be even less, right? Because you'll have something that looks like this, and that risk can even be even higher depending on where that last low is at. So this could be an aggressive way to look to get into this trade right in here if we continue to consolidate. And I say and or because of this. If you're more conservative, you can wait for the pullback. But if you're also a true trend continuation trader, you're used to swinging and missing, right? A true trend continuation trader doesn't just take one shot at the market and say, oh, it didn't work, I'm going to not trade anymore, right? What you're doing is you're looking, I'm going to try and draw my best thing out here. You're looking to say, hey, I'm going to try and enter right here for a continuation trade. Oh, that didn't work. I'm going to try and enter right here again for a continuation trade. Oh, that didn't work. I'm going to enter again here for a continuation trade. Oh, that worked. And you still make a lot of money for you. You'll still make up for your previous losses. So true trend continuation trader, I'm running out of steam here, guys. They're swinging and missing, swinging and missing, swinging and hitting, right? Similar to like Richard Dennis and the Turtle Traders, where, those guys are taking multiple opportunities. So you can certainly do both. You can certainly have your first chance aggressive entry right here. If that fails, just, don't get scared out the market, right? Reload for your second chance, and the profit that you make off this second chance opportunity, right? Because you're still looking for the same expansion point up higher, you'll more than make up for what you lost on the first time. And that's just the math of trading. That's why it's important that you know your numbers. It's not necessarily about win percentage, right? It's about risk reward and win percentage and that combination. So this is a cool little setup to keep an eye on. Again, specifically pay attention down to the hourly 4-hour. Right now it's high and tight flag. And again, we continue to do this. This is a very nice setup. We know that it will break out one way or the other. It's more likely to break out to the upside. I haven't looked at the news yet coming out this week just because I've been bedridden or whatever like that. I tried to survive some of my kids' games yesterday, and that just made things worse. But keep an eye on this. I think this is a very good opportunity for a trader and an investor. So appreciate you guys hanging with me during the video. Not my my best one, but I hope you guys enjoyed it. Also, thank you for all the kind words with the Trading Coach podcast. We've been putting out some really interesting episodes lately. You guys have been giving some good feedback. I'm asking for you guys to kind of share your stories, share your advice with the community when it comes to stuff like anxiety, when it comes to depression. We've been hitting on some very kind of personal topics, I guess you can say, in the Trading Coach podcast. So I really appreciate you guys kind of sharing your insight, whether it be under the YouTube or a lot of you guys are commenting under Spotify. That helps massively because, trust me, other traders read that stuff and it makes them feel comfortable. It's one thing to hear Akil say it. I've been so far away from being a younger trader. It's really cool to see other people saying like, hey, I had depression, I had to take a week off, or one guy just said, one of the sacrifices I made, I dropped out of college and stuff like that. Keep that coming. It's great for the show, and it's really cool to see that after 900 plus episodes, the podcast is still going strong, and I'd say stronger than ever based on the numbers. So I appreciate it. It's fun to do, and I enjoy doing those 3 episodes a week, and seeing that you guys enjoy it too just motivates me to do so. So I'll see you guys next week. Until then, plan your trade, trade your plan. Remember, March 25th, free trading workshop. So mark your calendars for that. It'll be a full week. So that full week of March 25th. Mark your calendars. That way you can show up and get some free education. All right. Going to go chug some medicine, and hopefully I'll be better for you guys next week.